We'll be starting in just a moment, but there's a sign-up sheet in the back for anybody who wants to speak on either of the bills, which is, again, a hearing only. You want to bless us? You want to say a blessing?
Sure.
First, I'll recognize you when I get started. Yeah. Huh? Yeah, I don't.
Oh, there he is. There comes the
Oh, you want? You hear a good prayer? Is that what you're saying? Okay.
He prays a lot for me.
Okay.
Hurry up, Park will get here. They won't make me
Yeah.
pray.
Yeah, you need to pray over them.
We know it'll be short.
Okay, I believe the hour is at hand. Thank you, members, for being here. Let's before we begin, I'm going to recognize Representative Perkle to say a blessing for the meeting.
Okay, bow with me if you will. Dear Heavenly Father, Lord, I do thank you for this beautiful day of creation that we are part of. And I thank you for this body and for this great state that we live in. And God, I pray that you grant us wisdom as we seek the best interest of the state and as we're good stewards of what you've given us. In your name I pray. Amen.
Thank you, Representative. Our first order of business, we need to adopt our banking committee rules. These rules have not changed at all, really, from our last for our veteran members and for Representative Washburn, Allen, and Moore, our new members. If I don't know who's here, these are they're pretty self-explanatory. Major thing is our quorum would be 6 members if we adopt these rules. If you've had a chance to look at them, or if you have any questions, now would be the time to let's have that discussion. If not, then I would entertain a motion on these rules.
Second.
We have a motion and a second to adopt the rules before us. Any further discussion? All those in favor, aye.
Aye.
Any opposed, no. Thank you. The rules are adopted. Today's meeting is a hearing only. First, we're going to be hearing House Bill 185. This is what we call our housekeeping bill, our department bill, the things that we need to do to adjust to federal or whatever issues that are involved. And as usual, Representative Williams is going to carry that bill and present that to the committee at this time. So
Thank you,
may
Mr. Chairman.
proceed.
Thank you, Mr. Chairman, members of the committee. I am Bruce Williamson. I have the honor of carrying this 22-page bill that, once again, is the Department of Banking and Finance's annual housekeeping bill. It's part of a multi-year effort. In fact, we're on the tail end of a multi-year effort to modernize and streamline the banking code for the state of Georgia. This bill is, from my notes here, it's going to focus, continuing to help Georgia have a more competitive landscape. The bill has provisions impacting banks, credit unions, money service businesses, and mortgage entities, something that we all live with as we move our finances around. Legislation is supported by the Georgia Bankers Association, the Community Bankers Association, the Georgia Credit Union affiliates, and the Mortgage Bankers of Georgia. It is bipartisan legislation, and Representative Frazier and I are bringing this bill to you today. It's going to do a few things. I'm going to touch on a couple of the highlights, and then we'll go through a section by section if you so desire. But it's going to make sure that deposit insurance stays in effect through a merger between when a credit union purchases a bank. Most of us are aware of the fact that any member anybody using a credit union has to be a member. Well, we've had 2 instances in the past year where credit unions have purchased banks. This legislation would ensure that upon another purchase by a bank, by a credit union, that all the new bank's customers are by definition members of the credit union. That has an important effect of making sure that those new depositors are covered by the new depository insurance, which is at that point no longer the Federal Deposit Insurance Corporation, but the what's the name of the credit one?
NCUA, National Credit Union Association.
National Credit Union Association, which is insures the deposits of credit unions. It will also touch on our mortgage industry originators. Heretofore, the code says that if you lose your sponsor as a mortgage originator, for example, you could be simply moving into the state and not have a sponsor yet, or have a sponsor, the sponsor chooses to go out of business, or you decide to take some time off. Rather than suspending your license, you can immediately go to an inactive status. It doesn't have the stigma of a suspension of your license. Now we'll still be able to treat the bad actors as bad actors, and they will have due process. They can be suspended by the department, and they will have their due process rights to get the suspension overturned. But for the vast majority of people that for whatever reason are moving from one sponsor to another or won't just simply go active, there'll be the inactive status for that. That comes with a unanimous support from members of that industry. Briefly, there are numerous sections of the bill. Again, I asked the chairman how detailed you wanted to hear this bill. I will just sort of hit some of the highlights and see if it elicits any questions on your part. So Section 1, briefly, lines 29 through 31 are going to eliminate the term appropriated retained earnings. The term's unique to Georgia and is not used by any financial regulators, and it's basically just cleaning up that kind of unnecessary language. Line 66 to 69 clarifies that a credit union can receive deposits from banks, and I just explained that situation. Whether or not the bank is a credit union, I'm sorry, this is a separate situation. Clarifies that a credit union can receive deposits from banks or credit unions, whether or not the bank or credit union is chartered by the state. And incidentally, this is Bo Fears, who is the attorney for the Department of Banking and Finance, and was really helped steer this whole legislative effort of this bill this year. Moving on to Section 1, lines 70 and 76, eliminates the term expense fund. This deals basically with eliminates the term expense fund from the paid-in capital definition. We're going to propose to eliminate the expense fund requirement from Georgia law because it's whereby a startup bank is required to set aside a certain percentage of its capital, and the intent was to basically reduce the legal lending limit with the anticipation of any de novo bank, and I've experienced this twice, is basically going to lose money for 2 to 5 years, actually. And you didn't want a brand new institution coming out of the gate, lending up to their then legal lending limit, and then have, because of erosion of their capital, their lending limit fall and put the bank immediately out of compliance, even though they might be performing loans. But due to some previous legislation we've done, that makes that mechanism unnecessary now, so we're proposing to eliminate that. Section 2, lines 84 and 87, aligns the treatment of permissible borrowings for examiners at the department. Georgia law permits a bank examiner at the department to borrow from a licensed mortgage lender, and this revision will permit an examiner over mortgage lenders and brokers to borrow from a state chartered bank. So what we're talking about there is, it's just sort of a quirk in the law. The Department of Banking and Finances has basically kind of 2 sets of regulators. One set of regulators is regulating our depository institutions. That's where they're taking public deposits, and that's what we know as banks and credit unions. The other set of examiners are examining the money service businesses, and that include Western Union, moving money around, money orders, the money service center, all the things that a Walmart typical money service center does. They're moving money. They're handling money, but they're not accepting public deposits. And what we all worry about is losing our money, and that's where the deposit insurance aspect comes in. So this will simply allow anybody that's not regulating depository institutions to go be customers of depository institutions, and people that are regulating the depository institutions will still have access to mortgage lending. So they can go get a loan on a house through a traditional mortgage lending arrangement because they're not regulating that industry. So that could elicit some questions on the floor, but that's simply trying to have reasonable opportunity for the department's employees to go utilize financial institutions over which they do not have direct supervisory control. Did I say that correctly? Yes. Okay. Right. Section 3 just eliminates the reference to the expense fund that we've already mentioned. Section 4, during the 2017 session, the General Assembly enacted legislation permitting the department the ability to charter trust companies. That language permits the department to conduct criminal background checks on the directors and officers of an institution that seeks to acquire a state-chartered trust company. The department already has the authority to conduct criminal background checks for mortgage brokers, mortgage lenders, mortgage loan originators, and mortgage service businesses. Section 5, lines 163 and 164, eliminates the reference to appropriated earnings, which we've talked about. Section 6, lines 208 through 224, during the 2017 session, General Assembly enacted legislation permitting the department the ability to charter trust companies. Is that a repeat of what I just read?
You can compare it. There's in 2 different sections.
I'm sorry. So it's basically the same thing I just talked about, but it's in 2 sections like the attorney just said. Section 7, lines 234 through 235, the department proposes to eliminate the expense fund requirement from Georgia law, and there again, that's just the legalese.
It's eliminating the expense fund. It's in a number of spots.
Okay.
Referenced throughout the code.
All right. Lines 256 to 257 eliminates the reference to the expense fund again. Section 9 eliminates the authorization for a bank to charge financial losses in excess of capital to pay, I'm sorry. We're looking at lines 266 through 271. It eliminates the authorization for a bank to charge financial losses in excess of capital to the paid-in capital under certain circumstances. The department understands that this authorization conflicts with normal GAAP requirements, which is general accepted accounting practices. The department has no record of any bank ever utilizing the power in this code section, so it's just really unnecessary. And that comes at the suggestion of the industry and the department. Section 10 is again eliminating expense fund requirements. Section 11, again, talking about the expense fund. Section 12, again, talking about the appropriate retained earnings issue. Section 14, lines 342 through 343, and then following. It's the distribution upon reduction of capital stock or paid-in capital, eliminates the reference to Code Section 71411, which is the ability to charge financial losses in excess of capital to paid-in capital. I'm not a lawyer. I don't quite understand why we keep talking about this throughout the bill, but it's Legislative Council says we need to. Again, Section 15 is addressing the same issue about the ability to charge financial losses in excess of capital to paid-in capital. Section 16 aligns the language regarding when shareholders have a right to dissent to a sale of the bank with the language set forth in the official Code of Georgia annotated 14-2-1302 of the Corporate Code. Section 17 eliminates the prohibition against out-of-state holding companies forming a new state-chartered bank in Georgia. In light of the fact that, and the reason for this is that currently an out-of-state bank can acquire a de novo in the state of Georgia, and this is going to allow an out-of-state bank to start a new bank in Georgia, de novo. So it could be out-of-state bank holding company could form a new bank in Georgia, de novo bank. And I would argue that that's having been in that space before. I think it's healthy for the lending landscape in Georgia. For most of us got our first loans from community banks or credit unions. And with the consolidation of so many banks now into much larger banks, and the best evidence seeing our largest state charter community bank being SunTrust is being purchased by BB&T through a merger of equals. But that is a huge hole in the state chartered bank assets for the whole state. So.
Do we have a request for such a charter now from somebody, or are we just anticipating?
That's a good question.
Chairman Morris, we do not have a current request,
Okay.
but it's viewed as a potential limitation to forming de novos, so that's
Okay.
why we decided to eliminate it.
Good, thank you.
Section 19 renames the supervisory committee to audit committee. This change is made to prevent confusion with federal law. Again, it's just cleanup. The responsibilities for a supervisory committee at a federally chartered credit union is different than the responsibilities of a supervisory committee for a state chartered credit union. So just trying to get that in sync. Lines 424 through 426 provides that a credit union can purchase or sell loans from entities other than financial institutions, i.e. licensed mortgage lenders and fintech companies, which we've addressed legislation in the last few years, specifically regarding the fintech, which stands for financial technology companies. And again, I have shared this fact with the committee before, but I think it's important for any new members on the committee to realize that it's estimated 75 to 80% of the world's credit card transactions are processed through Atlanta, Georgia, through a confluence of a great business-friendly state, basically the fiber optic highway that's a legacy of the 1996 Olympics, the venture capital interested in the space and everything else. We've become basically a hotbed or a mecca for new financial technology startup companies, and that's good for Georgia. It brings a lot of innovation and a lot of jobs to Georgia. That's just a side note. Section 21 provides that if a credit union acquires a bank, the depositors and borrowers of the bank will be members. I talked about that in my opening remarks. Section 22 aligns, which is lines 441 through 449, aligns with the federal law and permits state chartered credit unions to adopt a policy permitting it to expel individuals from membership for non-participation. And Representative Frazier will agree that she's got more experience with the credit union space than I do, but again, you have to be a member to utilize a credit union. Well, credit unions need to make sure that that if they're not using the credit union, they're no longer a member and can't vote. You don't want anybody voting that's not utilizing the credit union. Section 22, which is lines 441 through 449, aligns with federal law and permits, I'm sorry, that's the same one I just read. Section 23, 456 through 462 renames supervisory committees to audit committee, and Section 24 is addressing that same issue. Section 25 is addressing that same issue. Section 26, lines 503 for 512, creates a process for a Georgia State Chartered Credit Union that merges with a non-Georgia credit union to seek permission to continue to engage in an activity that would not have been permissible if the purchase entity had been a state chartered credit union. And this provision mirrors a provision in the Georgia Banking Code. Section 27, lines 526 through 539, and we are getting towards the end here, provides a number of exemptions from requiring money transmission licenses. A number of these exemptions are included in the Uniform Money Services Act. The individuals or entities that fall under these exemptions are already directly or indirectly regulated by the department or other regulatory bodies, so the department believes limited benefit is gained by requiring licensure of these entities. So line 552, under that same section, it's going to extend the period of time to conduct an examination of a money transmitter or seller of payment instruments. And we need to understand this in case, as members of the committee, in case anybody asks us about this bill. This bill would extend the time frame for an examination from 2 years to 5 years. But what it would allow, as in any industry, the department is monitoring all of these financial institutions, these money transmitters, but this would allow the department to focus more energy and efforts on the ones that need more direct supervisory control. I don't want to say bad actors, but they just want to be very, very heavily involved with the people that might have questions about, and the people that are doing everything right through the normal supervisory activities, they don't have to mandatorily come back every 2 years and do a full-blown supervisory audit. Did I state that sort of pretty much in the correct terms? Section 29, lines 564, extends the period of time to conduct the examination of a check casher, and that's the same situation. There's a difference between what's identified as money transmitters, and then obviously check cashing is a different industry, but the same supervisory rules would apply. Sections 30, 31, and 32 are correct in statutory references, provides that a licensed mortgage lender is authorized to engage in activities permissible for a licensed mortgage broker without having to obtain a mortgage broker license. Section 33, lines 608 through 619. The state of Georgia regulates mortgage loan originators due in part to a federal mandate in the SAFE Act. Last year, Congress amended the SAFE Act to require each state to provide for a temporary authority for mortgage loan originators to engage in business in the state, even though not licensed in that state. And this revision provides that the department has the specific authority to enact these rules related to a temporary authority. So basically, if somebody's new in the state, the federal law says they can continue that activity, but you can take it away if you deem it appropriate. Okay. Section 34, lines 624 through 630, provides that instead of the department issuing a suspension in the event a mortgage loan originator loses his or her sponsor, they're going to find that as just place them as inactive, and I talked about that in my opening remarks. Section 35, line 6, and this is our next to last section, lines 639 through 665, extends the time of period to conduct an examination of a mortgage broker from 2 years to 5 years. So that's money transmitters, check cashers, and mortgage brokers all are going to go from 2 years to 5 years under this legislation for very appropriate reasons. Section 36 deals with the current license suspension process for mortgage loan originators. And that, members of the committee, is sort of an overview, section by section breakdown of a bill that all parties are in agreement with, but I'm happy to answer any questions you might have.
Okay, well, first, Ms. Donna's gonna pass out the test, to see how everybody, is gonna do. Well, all right, let's hold the test. Don't do that. And we do have one question so far. I can't tell who that is. Oh, Representative Douglas.
Yes, sir. Thank you, Mr. Chair. I had a question when you started out early on about the mortgage originators. If they move here and work for a mortgage company, and they work under the same license as the mortgage company, and the mortgage company closes, are they inactive because they were working under the license of the company that just went out of business?
I'm gonna take a stab at it and see if I can pass the test.
Okay.
It's my understanding this is almost exactly the situation we're trying to help people. It was the mortgage loan origination it was out of his or her control. Guy goes out, he or she goes out of business, their boss does, and she or he are in limbo.
Right.
This will allow them to immediately go to an inactive status.
Okay.
The current law says they have to be suspended. And again, that kind of has negative connotations. If not to say that competitors would do it, but they could say, oh, their license is suspended. Well, that would scare a customer using that. It would be technically correct, but it would be through no fault of that person whose boss went out of business.
Further question?
Sure.
How long does that stay intact? How long
So
do they
they'd
stay
be
inactive?
placed inactive until they find another sponsor, and then they would immediately go back to active status.
Okay, so they do have to find another sponsor before they can actually transmit another loan.
That's
Is that
my
correct?
understanding.
Correct,
Yes.
that's correct.
Okay.
So, and real quick, just to expound a little bit on that, right now, how the current process is, if you lose your employer, you are no longer authorized to originate loans.
Okay.
Right? And so the process is the department has to, as Representative Williams indicated, has to issue a suspension. That's a lengthy process, but then you either what a lot of people will do, because they do not want an administrative action on the record, which I understand, is they will withdraw their license. Well, if they voluntarily surrender their license, and let's say they get an employer within that same calendar year, they have to reapply for a license. They have to go through that entire process, as opposed with the inactive status. On NMLS, an employer, the Nationwide Multi-State Licensing System and Registry, their employer will enter in that they are no longer employed for whatever reason. They've gone out of business, and they'll notify the department. The department will really just hit a button, and it'll indicate that that individual is inactive.
Okay.
When they get their new employer, their new sponsorship, the department will receive notification through the NMLS, and we will hit another button, and they will show up as active.
Okay. Okay.
So
I think-
it's really a win-win, in
I got
my
you.
opinion.
Gotcha.
Good question.
Ridley.
I just got a couple of questions, just clarify something for me, if that's possible. On section 7 down there, around 234, where you cross that out. So basically what we're doing there, instead of using the word expense fund, now we're going to use the word paid in capital. Is that what we're doing? Because it's kind of everywhere it's throughout the thing is where it says expense fund.
So what happened is last session, we changed the definition of statutory capital base that impacted the legal lending limit. The definition of expense fund essentially has that definition, right, of the capital stock.
Mm-hmm.
The expense fund requirement was solely to put a kind of a governor on a bank's legal lending limit.
Okay.
Capital stock is no longer considered in the legal lending limit.
Okay.
So, you know, if you have an expense fund that's kind of made up of the capital stock, it's not going to impact your legal lending limit.
Okay. And that kind of leads to my next question. I can't remember what section it was, but where we're talking about banks coming into the state to open up new branches and that kind of stuff, they still have to go through the same process, I guess, although things have changed a little bit over the years. They get a charter through the state in order to move that bank into the state of Georgia. Can they go ahead and open up a full bank, or do they have to do the loan production office for so long and then move on to the full banks like we did kind of back in the late 2000s?
They can go ahead and charter, as soon as they receive a charter, they can open up branches. Now,
Okay.
obviously, different banks have different approaches. Some will want to do loan production offices, but they have, depending on their business plan, the department will impose different conditions, different capital requirements, but they have the ability to open up immediately as a full-service branch.
Thank you.
Any other questions from the committee? I don't think anybody else was signed up to speak on this particular bill, are there? Okay, no. So thank you, Mr. Fears and Representative Williamson. Thank you for your thorough, as usual, thorough explanation. And,
Thank you, Mr. Chairman. I owe all the members of the committee a free cup of coffee.
Yeah. All right. Well, we'll take you up on it. Thank you. Okay. Now we'll hear from, and you can present it from there if you want, or would you rather go? I mean, either one is fine. House Bill 193, Representative Donahue. You may proceed, sir. When I get your, what number are you, 22?
Yes, sir.
Okay.
Thank you, Mr. Chairman, and I thank everybody on the committee for your opportunity. And I have Brandy Bickle here with me that will be commenting on certain parts of this bill. The House bill is 193, LC 363767ER. 40% of Americans cannot cover an unexpected $400 expense. That's kind of hard to believe. What we're trying to do is eliminate that by helping with what we're trying to do in this bill. And 10 people that cannot easily handle an appliance when it breaks down, a car, they have no money in savings. 58% of all Americans have less than $1,000 in savings. When we start looking at people that are retiring, they're retiring with not enough money in savings that 83% actually I found retire at what you call poverty level and depend on Social Security to take care of them. We want to make a dent in that with this bill HB 193, which would allow Georgia financial institutions to offer savings, promotional, raffle prizes. This is not a lottery. This isn't to where you can put money into a savings account and lose that money. What we're trying to do is teach a different method, a proper method for saving. And as we go down through here, and Miss Brandy's going to comment on some stuff, what we're trying to accomplish, main goal is, when I was a young man many, many years ago, we had a little thing right here. You'd put a dime and pennies and nickels in, and you would start to save. We had a little book that I could put a few dollars in every week, and they would stamp the book, and I knew I was saving money for what we call down here the rainy day fund. So it was simple things. When my grandkids were born, my kids were born, we put so much money into a savings account for them, for college, for whatever they needed as they grew older. And I thought most people did that. And then I started researching more and more and found out that that didn't happen. We already have a numerous amount of states, I think it's 28, that has this practice. Number one, all the banks, credit unions, they all have no problem with what we're trying to do. But to accomplish this, we wanted to make sure that government did not impose on them rules and regulations that everyone had to participate in this if passed. So that means that if a credit union stands alone, or a bank, or if a credit union or a bank has multiple offices throughout the state or in the community, that they can participate if they desire. They can present a prize of what their own rules would be without us legislating and telling them what the rules would be. Not every bank and not every credit union will take place with this. Again, when we look at this, I've had some people come up and said, well, it's gambling. No. If I go out, I put $2 to buy a ticket to the lottery, I lost $2. There's a small chance that I might win, but a very small chance. If I do the same process here and I put money into a savings account, my name will go into a lottery raffle drawing without the opportunity to lose that investment. It encourages me to step forward and every week to do a commitment, which I did 100 years ago when I was a young man doing this project. I would put $5 to $10 every week away. As I was older, I would put more money away. And then it got to where it amazed me how much money accumulated by a certain practice that I took part in. I've taught my children, my grandchildren, have been a mentor to a lot of the young people in education, schools, middle schools, to help forward a practice. With all that being said, someone else come up and said, yeah, but I think it's still gambling. I said, well, let me ask you a question. On your birthday, do you receive a prize? We might call it a present. Same method. You didn't invest anything in your birthday except you were born. And then people will give you a present, and you open the present, you receive something. It might be money, it could be something you want, something that you're going to play with and tear up in a day or two. But I'm going to let Ms. Brandy talk a little bit, and then I'm going to come up, and if there's any questions, I will answer them.
Thank you, sir. Thank you, committee, and thank you, Mr. Chairman. My name is Brandy Bickle. I represent Georgia Credit Union Affiliates, which represents the credit unions that are headquartered here in this state. And we appreciate the time. What we would like to do is just, number one, encourage you to think favorably on this bill and to hopefully move it forward. But our time here today, we'd like to talk a little bit about the history behind it, and then what it is and what it isn't. Because there's parts, I call this legislation a platypus, because there's parts of it that look like one thing, and there's parts of it that look like something else. But when you get down to it, it really is its own breed of animal. It's unique, it's different. And if it looks familiar to some of you, it's because this committee actually passed this exact same bill out in 2017. Towards the end of the session, it was a Senate bill, passed rules, and it was one of the many bills that didn't make it across the finish line on that rules on that 40th day. The only differences between that bill that passed and this bill that you see is we took out the fluffy preamble. You know, it doesn't have a sexy title. It doesn't have, you know, a little preamble to the bill. But the two sections of the bill remain the same, which is the permissive, the flexibility, this is how these accounts should look. And then the second section, which outlines that this particular breed of animal, if you will, is one of the items that the state allows to not be considered a lottery or gambling. So for those of you who weren't here on this bill previously, and this, you're right, sir, this particular issue is not new. Michigan was the first state that actually instituted this kind of schematic, and they were doing this because they were looking for a way to help consumers grow their savings. And other states started to follow suit. So in 2014, the federal government passed a law. It was the American Savings Promotion Act. And they basically outlined, okay, let's remove some of the barriers that other states have had to outline that it's not considered lottery, that it's not racketeering, it's a permissible activity for financial institutions. But from our perspective, you know, each state needs to look at, okay, well, since this is a unique animal, we need to make sure we have legislation so that it looks a certain way and that rules are adhered to. There are 28 other states. We're hopeful that Georgia will be the 29th state that allows this type of account. And what it does, if you would think of the savings account like a CD, with the CD and the same rules that would you apply to a CD, but if for every X amount that you save, say every 25 bucks, or however that particular financial institution chose to structure it, that you would be entered into a possible chance to win additional funds. How we've seen this in other states is they've done monthly prizes and they've done a larger year prize. This isn't a big make it rich kind of moment, but I know how excited I get when I find $10 in my pocket. That's that same kind of incentive. And that's really what this bill is. It's an incentive to save. You're looking to encourage people to start developing that habit. So what it's not a substitute for a long-term savings plan. If you are a good savvy saver, and good for you, keep plugging along with what you're doing. I mean, you are definitely open to these accounts, but it's not a replacement for a retirement plan. This goal is to get people who aren't saving now, those people who can't scrape together $400 to start saving money. We've run into the same issue where, well, that kind of sounds like gambling. Well, from our perspective, you know, the person is never putting their money on the line. When we look up the definition of gambling in state law, which is 16-12-21, it doesn't fit that definition because you're not making a bet. You know? And when you do look up the definition of, okay, well, what is a bet? Well, a bet is risk, and you're not at risk with this particular thing. Someone asked me on the committee, and thank you guys for all sharing your time with me. Someone asked me, they were like, well, what's the downside to this? I'm like, well, the downside is you're one of those people and you do not win. Well, guess what? You have money in your account that you did not have before, and that's the goal. And another thing, it's not just for one segment of the population. This is something, we all need help saving. There are people who make all ranges of money, from very wealthy to not, that live paycheck to paycheck. And this is to help grow anybody who can't save, or help grow that habit. And finally, it's not going to save the world. This is not something that's going to come in and eradicate poverty or all of a sudden make sure that we can all retire exactly how we want to in life. But in passing this would help Georgians be more able to save and help develop that savings mindset so that when they have financial challenges, they're better prepared for that. More than happy to answer any questions. I'm more than happy to walk through each section of the bill, but I want to be respectful of the committee's time as well. And I thank you for listening to the legislation.
Let me,
Thank you. I think we'll direct the questions to
yes, sir.
Mr. Donahue. Thank you, Mr. Bickle. Thank you.
And Mr. Chairman, to make one little comment, some of the states that are doing this, for instance, there's multi-states, Indiana, different things, you'll have monthly drawings. Indiana does monthly 175 drawings for $25. That's a better incentive for everybody that's got more of a chance to win. There's some that will do quarterly 2 drawings for $1,000 each. By doing that, basically, your name is still in that pot. If the first drawing is drawn and you keep participating and putting $25, whatever that bank or credit union decides, into your savings, you still have an opportunity to win. There's several states that have done more and more where you can win pretty much every month. And the process might be $100 times 10 people. So it's the opportunity for you to start a practice of saving money with an opportunity to increase your money that the banks and credit unions, they provide their own, and they're not held to a standard by us to say everybody has to participate. But I'd be glad to try to answer questions, and if I need Brandy on one that I might miss, then I'll be glad to let her jump in there with us. Thank you, sir.
Representative Williamson, you have a question for
Thank you, Mr.
Representative
Chairman.
Donahue?
Yes, and this might be something that Ms. Brickell might have to help us out on. So in line 84, we're talking about it has total assets of not less than 100 million. Does that aren't there a good many credit unions in the state that have less than 100 million in assets? Or is this going to be done? Is this going to be a program run by the Georgia Credit Union Associates statewide? So,
Yeah, let Representative, at this point, let
I'm sorry.
Representative Donahue, if we can't, we'll figure that out
Right.
after the meeting.
You know, and that's when I'll be honest with you on that. I can't tell you if that's every single one would fall under the state. It could depend where there would be certain ones that might not qualify. But again, every one will not participate, every credit union nor every bank. So you could have a bank that falls into that, has 4 branches under it, or a credit union that has 4 branches, and they would qualify there. And please correct me if I'm wrong on this, but that would be the understanding that I have. And again, everybody's not going to knock the door open to run out to do this. But we hope that if we pass it progressively in the next few years, that more and more will fall into this.
Yeah, go ahead.
Follow-up question. So again, I'm not trying to be negative. I'm just trying to understand the structure of it. If the intent is to basically make every bank that wants to set up a situation like this could do so, maybe through one of their trade organizations. In this case, we're talking about Georgia Credit Union affiliates. If they're doing it sort of system-wide for various member banks to participate in at their choosing, is it going to limit them to having to have $100 million, and wouldn't that put them at a competitive disadvantage if they're trying to grow their asset sizes and grow their customer base in smaller communities? And that's my only question.
And good question.
Who's running the scheme and
No,
who's
it should not make them maintain that $100 million.
Thank you.
Yeah, we can follow up on that, Representative, and then when we come back, there'd be more, we'll go back over this again. Remember, this is just a cursory hearing to everybody get familiar with the bill. And if, right now, we don't have any more questions, but if they come up, if there's anything that you have a concern about before the next meeting that we have concerning the bill, then take those concerns to Representative Donahue, and he can, I'm sure he'll help you through those questions to see how you feel about the bill. And then when we meet on the bill again, then the author will again take questions from the committee that you may have had. So you got several shots at it. Is there any other business that needs to come before the committee right now? If not, then I will consider us adjourned, and thank you for attending. Thank you, audience. Thank you, members.